Welcome to the Leafy podcast, helping real estate investors and entrepreneurs grow.
Let's start the show. Hey guys, I am Jennifer Glegeritz, the COO of Leafy Legal Services, and I'm your host today for Leafy Podcast. Brian and Tammy can't make it, but that's okay because then I get the guest all to myself. So we're here today with a certified financial planner, a #1 best-selling author, and owner of Lake Growth Financial Services, a financial firm in Chicago, Illinois. And over the years, he's helped hundreds of his clients take back control of their financial future and build their businesses with sophisticated, tax-efficient financial solutions. On top of that, he's also the co-host of Not Your Average Financial Podcast. So please welcome Mark Willis. We're going to be learning a lot of new stuff today. Anyway, hey, Mark, welcome to the show.
Hey, Jennifer. Glad to be with you.
Yeah, I'm very excited. So we kind of jumped the gun and started talking because we were talking about our backgrounds because I wanted to have a new background today. So here's Galveston. And then, Mark, your background is there in Chicago. Now, how long have you been in Chicago?
Well, and this is my official view from my office studio. No, I'm just kidding. This is our virtual background here. But yeah, we've been here since 2008. My wife and I moved here after graduating from our 3 private school degrees and came with us 6 figures of student loan debt shouldered on our backs. So to move to a relatively inexpensive city like Chicago, Illinois, I'm just kidding, with all that extra debt on our back, it felt like a burden, a chain around our necks, and it really kept us from seeking the financial freedom that we were pursuing once we had graduated college. So that was sort of our way to start, and a great time to graduate from school, 2008, looking for work, right? Yeah. So that was kind of our start to the adventure of life.
Oh man, that's going to be tough too, right during this huge crash, and you're newly married.
Yeah, no job. Yeah. In fact, I felt like I married 2 women in college. One was my beautiful wife. The other was Sally Mae.
Yeah.
So it just brought it home very quickly that money is going to make a big difference. The way we handle our money is going to make a big difference in our marriage and my own sanity. So yeah, that's what got me focused on finances in the first place.
So tell us a little bit more about your background and expertise and how you are where you are right now.
Sure. Yeah. So I did. It really was born out of a desire and desperation to figure out my own money troubles, you could say. I followed kind of the conventional wisdom to take out a bunch of student loan debts. And wouldn't you know, I've kind of noticed since then that the average high schooler has a higher net worth than the average college grad for a number of reasons. But I also have kind of learned that average Americans typically have, on average, 35% of their income going straight to debt servicing. 35% of your income, according to the U.S. Commerce Bureau, Department of Commerce Bureau.
And that's if you're doing well.
Yeah, right.
There's the majority of Americans, I would say that it's even more than that, that's going towards just debt. It's robbing Peter to pay Paul every single month. I mean, exactly. I think people are just now starting to come out from this hole. A lot of people have been in since 2008, and now people want to talk recession, and I know that people are like, shut up. Shut up about that. We are, we're just now able to think that maybe we can breathe a little bit and it won't be such a grind. And now you're going to talk about throwing us into a hole, because right as you're getting out of the hole is the worst time to get pushed back into the hole, because that means the hole's going to be even bigger.
That's it. That's exactly right.
So, and that's what you do. You help people build true wealth that grows predictably, no matter what's happening in the markets. So I wanted to ask you about that. So I'm like reading all your stuff and listening, and I'm going, okay, this is something everybody needs, because there is a lot of fear, and most of the fear is BS, to be honest. It's being stoked by, people who want to win an election, right? Not saying that they're bad or, not picking sides, but, this is the times that we live in, so people are going to want to, fear is a good motivator for a lot of people.
That's right.
How do you help calm people down who are in fear to say, okay, calm down, we can have a plan?
Yeah. Well, again, my own story, my wife and I, we were affected by how we had made money decisions. I think money there's a reason why Jesus talks more about money than he does about heaven. Even religions seem to figure out that money has a straight, direct pathway to your heart. And I believe that where you keep your money will impact your emotional state, your marriage, your ability to retire well, and sleep soundly at night. I mean, there's plenty of studies on the power of a good night's sleep, for goodness sakes, on your health. So if, in fact, according to the Journal of American Medical Association, JAMA, 2 years ago, they came out with this huge study that if the stock market dropped by just 10%, there was an increase of 3.5 times more heart attacks at hospitals the very next day. Isn't that interesting?
No,
And
I find that very much hand in hand, because it isn't that we have such a love of money. It's just when you're already teetering on the edge,
mm-hmm.
and then it doesn't take much to go right
That's
off.
It. Yeah. Well, another recent study, the Federal Reserve study, recently came out saying that the average American, almost 50%, 48%, let's say, had less than $400 in liquid cash that they could come up with if they had an emergency. If they had a bigger than $400 emergency, they'd have to sell something or go into debt. That's every other person on the sidewalk that you walk by today. I mean, that's crazy,
no,
right?
That isn't crazy. When you think about it, if something happens, like there's something I'll do, because I'm Orthodox Christian. So we cross ourselves all the time. So anytime I see someone with a flat tire or any car thing, I'll cross myself and say a little prayer, just because I remember the days of what could make it or break it for me was something like that. Oh my God,
right.
What's going to happen? All of a sudden you're just driving, you just want to go to work or to be able to do it. And now you don't have a car. And I get that there are people who live that were mass transit, they have mass transit. But I'm going to tell you, the majority of even big cities like Houston, we don't really have a decent mass transit. You have to have a car if you're going to work anywhere. And most small towns, they don't even have buses. You know, if you can't afford to get in an Uber or something, and if you don't have a vehicle, you're up the creek.
Yeah, that's right. So most people are saving so little. Whatever they are able to save, typically, Jennifer, goes into speculative assets, like, things that they can't control or don't understand. And unfortunately, the four most dangerous words in the financial universe, in my opinion, are "do it for me." And too many Americans are saying that to their financial advisors, to their stockbrokers, to their investment planners, to their attorneys, and saying, "Hey, do it for me. I don't want to think about it. I'm too busy. I'm trying to keep up with the Joneses. I've got to cover my credit cards and mortgages and boat payments and car payments and student loans." When you've got that much debt, you're living a harried, crazy, insane life. And my recommendation is, let's find places to put money where you can reclaim the sanity and security and an actual plan to get you to your financial goal, whatever that might be, whether it's retirement, sending your kid to college without going broke in the process. So that's what we built our entire financial firm around, and we're having a lot of fun doing it. There's literal ways that have been time tested for centuries that the wealthy have used to keep themselves sane, even in the midst of a world gone mad.
So, because I want to just stress to anyone who's listening here that we deal with, accounts that are huge. They got 10 multifamily properties, 100 houses and stuff like that. And then we get people who are like, I haven't bought a house yet. I just want to do my, I just want to get the right structure before I do it because I don't want to make a mistake. So for those people, even if you're on razor thin margins, don't be afraid to reach out to a professional and to ask them and say, well, he just said, do it for me. Don't do that. Okay. So I want to quantify that. There is education that you can get. It is well worth whatever little investment you give to go back and say, I can implement these tools right now, even with this $200 extra that I have, I'm going to do something smarter with it. Or $100 that I have at the end of the month. And so you don't have to be wealthy to be able to save and to see real progress with that.
That's right. Oh, so true, Jennifer. So you bring up a great point. To still have an awareness and a control of your money is so huge, and understanding where it's going. you can still call on the experts. I need someone to fix my car when it busts and breaks down, right? I just don't, you know, if I tried to do it myself, I'd break the car further, you know. But I would say that you should at least know what it is that needs fixing when you go in there, so you have some idea of what they're doing to your car, right? Same is true with our money. What is it you want your money to do for you? Nobody else can answer that question. You know, do you want your money to be locked up for 30 years in a qualified plan? Do you want it to be accessible to you for all of your investments and family needs and that sort of thing? Do you want that money to be subject to Wall Street's whims, you know, or do you want some sort of predictable, stable, guaranteed accumulation on your cash every single year? You know, what do you think about taxes in the future? Do you think taxes are going to be lower, or do you think taxes are going to be higher as you look out over our nation's future? If you think taxes are even going to be 1% higher in the future, guys, mathematically, it does not make sense to have a tax-deferred retirement plan. You should pay your taxes now and have a tax-free retirement later on. So those are some of the things that we ask our clients. And I don't have the answer for each person listening, but folks should ask themselves, what do I want my money to do for me? If I could create my own perfect financial vehicle, like wave the magic wand or whatever, what would I want my money to look like? How would I want it to act? I always sort of say, you know, a hedge fund is going to be different than real estate or a 401k or a savings account. Where you put your money makes it act different. And too often people don't stop to ask themselves, what do I want my money to do for me? It makes a big difference.
Boy, that is really every single one of those questions I was asking myself in my head. And some of them I thought, well, I'm going to have to think about that. Why? And then I thought, why is that important? But then logically I know, well, this must be important if a certified financial planner is asking that. So
well, hey,
maybe I should be asking that.
Well, you might also throw on there some other things too. I mean, possibly, what about creditor protection? You know, sometimes accounts are exposed to creditor risk and sometimes they're protected, right? That might be something you'd want your listeners to pay attention to. If your money is exposed to somebody suing you, I mean, you would know more than I would. What is the likelihood that a real estate investor would be sued over their career? Do you have an idea on that?
Yes. Actually, 100 million lawsuits were filed last year, according to the National Survey of Court Data. And that means that 25% of Americans have a chance of being sued. For real estate investors,
wow,
they have a 95% chance of being sued in the next 20 years. They are sitting ducks, and they're the ideal target for vexatious and predatory litigants. You
might know our savings accounts. For example, if you buy your real estate and have a bunch of money sitting in the savings account, is that an exposed asset?
Yes.
Is that something folks could grab in a lawsuit?
Yes.
Okay.
Yes. Yeah, depending on what type of lawsuit and what type of litigant that can go, you need to protect your assets. And there are many ways to be able to do that. So again, you're a certified financial planner. So what does it really mean to be a certified financial planner as opposed to just some guy who helps people? And what should we be looking for as a financial planner? And then I've got a bunch of other questions after that.
Sure. Yeah. Well, so a certified financial planner is a financial professional who has jumped through a number of hoops. And oftentimes the hoops can take years to get through. I know for me, it was about 3 years to go through all the coursework and study. They also require that you uphold yourself as a fiduciary working in the best interest of your clients. It also is a mark of integrity that you've never been sued or something like that. So there's a long sort of laundry list of things. If you've ever been to the grocery store and saw USDA organic on the food, you know it went through a bunch of hoops to get that labeled. Similar with some of the designations I hold, and I do that not one for my own knowledge and learning and able to serve my clients better, but it's also a simple way to say to a client, hey, it's safe to work with me. We're going to be working in your best interest, not anybody else's.
Okay. Yeah, I know that there's a big difference with that, just like there's a difference between building. I just wrote a blog post about the difference between an architect and a building designer. There are differences between that, and it really depends on what type of service you want and what you're looking for.
Yep.
But for you, having to go through all those hoops, I just find that just the questions that you were asking are pretty amazing. So can you walk us through a sample financial plan that you might set up with a client? And I know that varies. That's a hard question. And
Yeah.
I know and I know that it's like, well, who are they? What are they doing? But like, how does that kind of, the 10,000 mile high overview?
Yeah. So what we do is we would meet with someone who has an interest in learning more about strategies that are out there. There's tens of thousands of ways to put your money to work. I think I tried to keep up. There are 450 financial vehicles that I was able to count going through my training as a CFP. And that's just the number of products. Then you can add them together. Like a savings account and real estate could be added together to create a strategy. And there's tens of thousands of different strategies to keep your money working either for you or for somebody else. So what we do when we sit down with someone, we usually sit down one-on-one in an advisory role. We don't charge a fee just to have conversations with folks and have a high-level overview of what's working and what's not working in their current financial plan. And everybody has a plan, whether you've thought about it or not, right? Even no plan is, in some ways, a plan, right?
Right.
So debt, credit cards, whatever, that's a kind of financial plan, right? So what we do is we ask them, what do you like? What do you not like? What do we need to change? Let's leave alone the stuff that you love about where your money is today. And then what we do is we simply review everything. We look at it from a high-level perspective. We ask some of those questions. There's about 30 different questions of what you want your money to do for you. We ask them, what kind of flexibility, what kind of contributions do you want to make to your financial plan? What do you think about taxes? What do you think about credit or risk, for example? And we go through those plus a number of other questions, and we just kind of we whittle it down. We say, all right, here's the 4 different financial vehicles and strategies that we think would be the best suit for you to help you reach your goals without taking a bunch of unnecessary risk. I believe in risk. I'm a business owner, but I don't think we should be taking unnecessary risks, especially with something as important and irreversible as our retirement money.
Absolutely. Okay, so guys, we are talking to Mark Willis. He's a certified financial planner, and he is with Lake Growth Financial Services. I want to make sure we get that out there as we continue. And he's also the co-host of Not Your Average Financial Podcast, which you can see right behind him. Which you were going through that, I had like these 2 little angels on. I got the bad one and the good one. And the bad one's like, taxes suck. I want wine. How do I buy more wine? I'm thinking when you go through these questions, you probably get some interesting answers. But I guess it's just being honest. I think some people be sure, just a little pro tip here, when you meet with Mark and when you give him a call and said, hey, okay, I listened, I want you to help me, then be honest. The more honest you can be, then the more he'll be able to go, okay, I see where we're headed here.
Yeah.
And to help you out with that. Because some people are going to want to, you think about, I'm meeting with a financial planner. That is like really adulting.
Yeah, adulting is the right word. Yeah. Well, yeah, you're right. And I believe that it's one of the coolest and most profound and fun and should be one of the deepest, to the core of what you desire about life, to have a conversation about money over your lifetime and really past your lifetime. What's that old quote? Rich people plan for 4 generations, poor people plan for Saturday night. And both are plans. They just have a different time horizon, right? So It's one of the coolest long-term thought processes. Like, what do you want to do to change your family tree so your great-grandkids are saying, wow, Jennifer really changed it all for us. That's awesome. I can't thank her enough. I mean, that's the kind of conversation I get to have all day long. It's the coolest job in the world. It's so much fun. See,
I have never, most people think about financial planners. I'm like, that is cool. That sounds really cool. It doesn't have to be scary and awful. And he's not going to make me feel like a loser. I think that is the biggest fear that people don't meet with a certified financial planner. They're like, I'm going to sit down, especially if you don't have it all figured out. Right? I don't want to sit down and have some guy roll his eyes when they say, do you have a 401k? Do you have savings? And me just, nope. And you're noping through it all and going, man, this guy I feel like crap about myself, because nobody wants to go somewhere where they feel bad. They would avoid it like the plague, even if they know it's best for them to do it. Yeah. So go, just FYI, Mark's not going to do that.
That's right. That's right. Well, hey, where I started, take a page from my story, right? We were six figures underground when we started thinking about our own money, not just at net zero. We were deep in the hole and in the midst of the worldwide recession. So, start where you are, grow what you can. And fortunately, it actually starts to snowball in a good way when you start taking control of your own money. Here's one of the things that I've really seen, Jennifer, in a lot of our conversations with folks. They tend to prioritize other people's money more than they prioritize their own money. Here's what I mean by that. They tell me, Mark, we really can't save until we pay off our credit cards. Well, what is that? Or our mortgage or our, auto loan. Well, what is that? That's prioritizing somebody else's capital over prioritizing your own capital. Or they'll tell me, hey, I can get higher rates of return if I just chase this latest mutual fund or this cool latest stock. I don't know if you've ever heard that before, Jennifer, but the seeking after rate of return is one of the biggest myths in the financial universe. Did you know, and this is according to third-party research, Dalbar does this study every year, and they come out with it. Every year they look at the real return of actual investors. And they say, hey, over the last 30 years, what was the real return of equity mutual fund investors? So I'll give you a guess here. It's actually surprising each year. They don't change the returns of all that much. But if you were to take a stab at it, Jennifer, what would you guess the average American would tell you if you just asked the average guy on the street what you could do over 30 years in the stock market on the average? What do you think folks would typically say?
They'd probably just come up with something like 10 to 20%.
10 to 20%. Yeah. So, the real return of actual mutual fund investors is 3.8% over 30 years.
Really?
Yeah. That's bonkers low. I mean, that's hardly above inflation. And that's after 11 years of bull market that we've had since 2008. Think about how pathetic that is.
Nuts. Yeah, that's nuts. Well, that's why, I believe in helping real estate investors, because it's a lot different when you're helping real estate investors. Yep. And even if you're just able to get 2 buy and holds, get your credit up to 680, and then, there are strategies where you can rent your business. They have multiple credit cards, multiple things you can do, and you can literally rent your business. And it's not for everyone, but if you are like, I can't handle the way my life is right now, I can't handle it, then there are ways to get out of it. But it's, just because it's not just do it for me, like you just don't want to pass it off, but it's okay to ask for help. Like, that's when you're supposed to ask for help. There's all these people like you, Mark, and we're talking again with Mark Willis, who's the owner of Lake Growth Financial Services. And of course, we'll have all the links and everything for you. Yeah. And, but you would call up Mark and say, hey, I need help. And, some of the people we have, have high net worth, and they, it doesn't matter. I mean, we get people who will still go and get an attorney, and they'll get a family office attorney just to help them with their stuff. And even then, they can go through everything and they've paid. And after some period of time, if they're on the old plan may not work. So they have to go too. I suggest, even when you think it's really working for yourself, always get a new set of eyes. As I did crisis intervention for businesses, which I did for about 20 years before I got into this space, one of the first things I always wanted to do when I walked into a business was, let's get an audit. And of course they go, we've got our guy, and our guy is good, and our guy's, okay, I'm not saying your brother-in-law Spanky is stealing from you, but what I'm saying is, let's get a new set of eyes.
Yeah.
So it never hurts, even if you have a financial planner, to get a new set of eyes. Maybe it can be something different,
Here's why I think I've been talking lately about having the last guru in your life. Most people will chase after the latest guru, whether it's in spirituality, whether it's in finance, whether it's in health and fitness. I mean, how many people are looking at that latest diet craze, or, that latest book you can finally solve your weight issue, or whatever the issue is, right? We're always chasing the latest guru. Most people will say, hey, just do it for me, right? They'll say, hey, I just tell me what to think, tell me what to eat, tell me how to pray, tell me where to invest my money. It doesn't matter what area of life. We all just sort of, hey, whatever you do, don't make me think. There's a great book out there by the same title, Don't Make Me Think. what I'd like to propose is a brand new way to approach your financial life, and really all areas of your life, where the guru, maybe at first he or she is saying, look, here's a brand new way to think. Morpheus, for example, he gave the red pill to Neo, and he said, here's a brand new way to see the world. Take that red pill and watch your eyes open up for the first time. But at some point, Morpheus stepped into the background, didn't he? He was no longer the guru. At some point, he stepped back and said, Neo, you're the guy. You're the hero. You're the one, right? Literally, you're the chosen one, right? And I think
so geeky, I love it.
Yeah, come on, Morpheus, right? And going clear back to the Matrix.
Yeah.
We could do the same with Gandalf and Frodo. We could do the same with Obi-Wan Kenobi and Luke Skywalker. I mean, we can go straight nerdy on this episode if you want. But the key is, I think what all those movies are trying to tell us is, you are your own guru as long as you want to be. If you just hand off your heroism or heroinism to somebody else, they're going to take it and run with it, and they'll retire before you will. But if you are able to learn from the best, like Jennifer and the team here, if you're able to find people who can give you a new set of thinking, a new way to perceive your money, and then take it to yourself to become your own greatest asset, right? You are your own greatest asset, and you become your own guru. You won't need to be chasing after the next cool financial advisor who says you can get you 10% this year in the stock market. Right. You'll be able to know for yourself the answers to the questions I laid out. What do you think about taxes? What do you think about creditor risk? That sort of thing.
Yeah, and it doesn't have to happen overnight.
That's right.
That's it. You're not going to become, you're not going to become Mark overnight. You don't want, if your thing is, I just want to do my yoga studio and I want to have 2 rental houses, right? And this is really what I want. That's great. You don't have to be a CFP. Mark did that. All he's saying is that you can just learn slowly at your own pace, get someone to help you, and then before you know it, your money's working more for you and you're learning along the way. So it doesn't have to be some painful process. You can work at your own stuff, because sometimes people are in, the bad thing is when people really need you, they are at the max overwhelm. They are on that hamster wheel, just going over and over and over. Kids work, sleep. Kids work, sleep. Kids work, sleep. Oh, my spouse, I forgot about them. One. Kids work, sleep. It just gets to where it's overwhelming. And or school, throw school in there if you're going to school. Yep. And but getting help can actually make it a little bit better. You just have to take the first step.
And I believe that where you put your money will impact the overall sanity of your life. So it's not just about mindset, although we've talked about it on today's episode, but there are specific places you can put money and cash so that it, for the better, helps your marriage. Maybe it helps bring one of the spouses home. Maybe it helps you start working 30 hours a week instead of 60 hours a week. If you're not always chasing the credit cards and paying for their livelihood first, maybe you can live a more sane life. Maybe there's more opportunities for you to spend time with the kids or at church or whatever. So it all matters, right? Yeah. And you guys are helping folks learn a brand new way to think about money, and that's really what we try to do on our show and in the books we write and the clients we work with.
What is the latest book that you wrote?
The latest book is a book actually for business owners who do online sales, online Amazon, e-commerce, that sort of thing. I'll go grab the title.
Okay, yeah, cool. So now I'm going to play the Jeopardy theme. Oh, he got it right there.
It's called How to Be an Amazon Legend and Fire Your Banker. How to be an Amazon Legend and Fire Your Banker. We really believe that the biggest lever in your financial life, think of it like a hinge on a door. Hinges are pretty small, but they swing big doors. So what is the smallest decision that can make all the other decisions either easier or unnecessary? I believe that how you buy stuff matters more than what your rate of return was in your mutual fund or what you got in your last real estate deal. How you buy big things, including your real estate, matters tremendously. And I think the best way to buy things is to be the bank yourself and fire your banker and become your own source of financing. So that's what that book's all about.
Well, that sounds really cool. I'm going to put all the links to all of Mark's books on here too when we're done. Thanks. There's one last question I want to talk about before we go. You talk about how to increase real estate yields without additional risk. So I want you to just go off on that because, we just love our real estate investors. And
how geeky how geeky do you want to be? You want to keep it light or you want to go dive deep? How much
No,
time do you have?
no. Tell me. Well, we have all the time you can
Okay.
give us.
Okay. All right. So again, I've been talking about ways to put your money to work. One of the places that I found that was most interesting to me, and I never really expected it when I was doing my studies through the CFP courses, was this little known variation of dividend paying whole life insurance of all things. Now, I did not kind of get raised with this. I was kind of a buy term, invest the rest in the stock market. Jennifer, if you're following along, I actually bought term and went out to eat with the rest. I never got around to investing the rest. But when I stumbled across this weird old-fashioned whole life contract, it really kind of startled me. So it's a form of whole life insurance, but it's not the kind that Dave Ramsey talks about. And very quickly, it grows on a guaranteed basis every single year. So outside of the stock market, you're going to have a higher net worth every single day, every single month, every single year for the rest of your life inside the policy. And it grows based on the guarantees of the insurance contract. It is available to you, accessible to you anytime you want for any reason, including your real estate purchases.
That is very different. The only way I've known previously to do that, because we work with someone who does offshore trusts, offshore investing, and offshore insurance, is by having to go offshore. So my ears are both like,
yeah. Well, I'm always happy to go offshore too if it's like somewhere with a beach. That'd be a lot of fun. But you can do this in any state in the United States or Canada. And it's 160 years old, the concept is, but you can access the cash in this policy like a line of credit for your business or for your family. So I've used my policies to go on vacations. I've used them to invest in real estate. I've used them to buy cars. I've used them I will use them to help my daughter go to college here in a few years. It's a personal pool of opportunity cash that has no restrictions or prohibited transactions. So unlike some qualified plans, you can use this money both for personal, you could fix up your own kitchen, or you could flip the house down the street. It's really up to you how you use the cash in the policy. And to your question, Jennifer, the way it really helps increase the yield of your real estate without any market risk, this is going to sound crazy, and you can
I love crazy.
Give this as a bonus to the folks that stayed to the end of the episode. But when you borrow from this policy, you can use it as a guaranteed line of credit to yourself. It's literally written into a contract that you have access to this cash at any time. When you borrow from this policy, it will continue to grow as if you had not borrowed from the policy. So to say that another way, let's say you had 100 grand in cash, 100 grand in cash value in this policy that you could access. Let's say you took $30,000 out to buy a car. That year, you'd still get the same growth and dividends on the full $100,000 even though you had borrowed against the 30 to buy that car. Isn't that crazy?
Okay, so anyway, Mark just got himself a new client because I'm going to find out about this.
Yeah.
We're setting up my appointment as soon as we're done.
Awesome. Yeah, well, I mean,
I'm completely interested in that. I think you just piqued the little ears of every person that's going to listen to this.
Well, think about it this way. If you pull that money out and go let's say you can get 10% cash on cash with your real estate, and your policy is doing, whatever it's doing, 4, 5, 6%, whatever. Now you've just increased the market yield of your overall investment without any additional stock market or other market risk, right? The policy is growing guaranteed. Even if it was doing 3 or 4%, even if you did just that nominal amount, your policy is growing, adding to the 10% you did over here with your real estate deal or anything else you might need to buy in life.
This would be a good thing for any level of investor because we get every level. We get entry level, I talked to somebody who's driving Uber and then they were doing wholesaling and they were like, I've got this to do right now. So somebody like that. And then we talked to another person who's got, over 100 homes and they're multifamily all the way. And
it's awesome, Jennifer. Well, I mean, so think about, you could do this with, your HOA specials. You could fix up your HVACs, small stuff like property taxes, or move it on up to your down payments, or even be a full cash buyer, for your real estate. So you can essentially become your own banker. You borrow from the policy, you pay it back on your own terms. There's no required repayment plan. The policy simply sits there and grows while you wait to pay the loan off if you wish. If you never pay it off, the insurance company just deducts it from your death benefit when you pass away. So we teach folks how to become their own banker. And that's one of the strategies we talk about in this book and we talk about on our podcast.
Okay. Well, that was a great way to end this out. Okay, we've been talking to Mark Willis, certified financial planner, best-selling author, owner of Lake Growth Financial Services, and the podcast host, co-host of Not Your Average Financial Podcast, who's been blowing my mind this entire episode. So anyway, you guys, we are going to be ending. I want to thank you, Mark, for being on. And everybody, again, if you already listened to us, great. Tell all your friends. You can find us anywhere: Spotify, iTunes, Google Play, no matter, wherever, anywhere. And we'll be putting all the links and all the information on the show, so you can find Mark and you can have a sit down, a little talk with him and figure out how you can change your life no matter where you're at. I always have to look at my microphone that nobody can see.
Yeah. Well, hey, and if folks want to chat further with us, either me or one of my colleagues, we have a special website that you can go to as a result of this podcast. If you go to growmorewealth.com, and if you fill out the info there, one of our advisors, colleagues that would reach out to you and make sure that you're working with someone who's been trained and specially trained in the bank on yourself concept that I was just describing there. If this strategy makes sense, go to growmorewealth.com and you can meet one of our advisors.
I'm going to go to growmywealth.com.
Growmorewealth.com.
Growmorewealth.com, because I want to go there. And I will be going there now. Okay, I want to thank you again, Mark. It has been
pleasure.
Just incredible. And we're going to probably try to get Mark to come on again, even though he's...
Yeah, that'd be fun. Thank you.
Attention real estate investors and entrepreneurs. Did you know that real estate investors are a primary target for lawsuits? According to the National Survey of the Court data, 25% of Americans risk being sued in their lifetime. However, if you are a real estate investor, you have a 95% chance of being sued in the next 20 years. Leafy Legal Services helps you protect your assets and strategically grow your business and wealth. Leafy Legal Services are experts at the Series LLC and Delaware Statutory Trust, two of the newest and most ideal legal structures for real estate investors. Leafy Legal Services have the most personalized and affordable solutions for setting up LLCs. Property owners are always at risk when it comes to their assets. Anonymity is so important. If you own just a rental house and you own your home, you have to protect yourself and your properties from any potential legal issues. Leafy Legal Services have the right solutions to make sure you are happy and feel secure. They offer cost-effective documentation that suits their clients' needs. For a free consultation and ebook, visit leafylegalservices.com. They are waiting to hear from you. leafylegalservices.com.
Follow us on Facebook, Twitter, and Instagram.